Hey, this is Danielle. Welcome to the free video. So today I'm going to be talking about Zillow. This is a company that I had done a video on, I don't know, maybe a month or two ago, and I said that I was picking up shares of the stock. Since that time, it's done about nothing, and it has been consolidating. So, there's a couple things to say about that. I mean, number one, obviously, I would love if a company that I buy shares in would just immediately go to new all-time highs. But one of the main reasons why I bought the shares to begin with was because it had pulled back and because it was consolidating, and it just has yet to break out. So that breakout is going to need a catalyst. But until that happens, we're in this consolidation mode. You can see that we've kind of chopped around 140, really between 120 and 150 since all the way back here in the beginning of March. And what's really interesting is that we have earnings coming up. Now, this company is going to be reporting earnings tomorrow after the bell. And what I think is really interesting about it is that, number one, I mean, historically, they almost always trade higher on earnings. There was this one quarter, they had a little bit of a blip. But for the most part, Zillow trades higher on earnings. And because it has pulled back, because it's consolidating, it's in a much better spot to get a little bit more bullish on it than it would be all the way up here. Now, last quarter, yes, it did explode, have a great move, even though it was on all-time highs, but that's going to be a little bit less probable than being bullish when it's pulled back. So, I have a couple things to say about this one. Number one, because it's consolidated, because it's pulled back on lows, it's going to make it a little bit easier to be a little bit more bullish. And because of the implied volatility, because of the hype around this stock and just earnings in general, historically what happens is, like you can see on this stock, you see how it gapped up and then it pulled back, gapped up, pulled back, gapped up, pulled back, gapped up, pulled back. There's another strategy that I would like to employ here as well. So number one, I can just sell a basic put credit spreads, pretty easy at the money. Look for it to stay above these lows. And I'll show you what that looks like in a minute. But the second strategy would be to sell the at the money iron condor. You can also call it the iron fly. But basically what that would look like is, all right, we know this thing has been consolidating. We know that the market makers are pricing in almost a $12 move. And we also know that there's resistance at 150. We know that there's support at 120. We know we're trading at 125. And we also know that even if it does amazing, it's probably going to pull back anyway. So let's say that it comes up, it goes, comes right back down. How could we trade that? Well, the best way to trade that in the options market is going to be with just selling an at the money iron fly or iron condor, as it's called in Thinkorswim. Basically what I look to do is directly before the earnings report, I would take the current price, which right now is 125. Tomorrow maybe it's 130. So if it was at 130 tomorrow, I'd do it at 130 tomorrow. Then I would look to widen it out about the range of the market maker expected move. The market maker expected move is what the market makers are expecting it to do over the report. Okay. If you look at the earnings hot zone, you can see what the actual earnings gaps have been. You've had a $20 gap, $9.97, $7.57, $2.44, $8, $4.27. So it's kind of been all over the board. But what we've seen after those gaps is it usually pulls back. So if you're looking to sell at the money premium, the best thing about that is that is the juiced up premium. That's a premium that is at a very heightened price right now. And after the report, that's just going to drop like a rock. So the idea of coming in and saying, hey, I want to sell the most expensive, at the money call, most expensive at the money put, because I think that this thing could blast higher and then kind of pull back, and I just want to make money on theta decay, the best way to do that is going to be with the at the money iron condor. So just pricing it out with one contract, do it $10 wide. It's going to give you a credit of $7.96. As you can see, the risk reward is pretty phenomenal. You're risking about $200 a contract for a max of almost $800. So very solid risk to reward on something that has pretty high IV, 118%. the idea with this would be that you sell it before the report, next day, buy it back. In a perfect world, this would be a Wednesday to Friday or Thursday to Friday deal. Because this ticker is going to be reporting tomorrow, you are going to have to wait Wednesday, Thursday, and Friday. So your theta decay is going to be a little bit slower. So let's say you sell it for $8. Next day it's worth maybe $7. Next day it's worth maybe $6. Then it's worth $5. Then you just made $3. You sold it for $8, buy it back, and then you make $3. See what I mean? So kind of like a slow theta decay type of position. Definitely different from the normal directional stuff that I do. If you want to make it more directional, you just come in and sell the put credit spread. So sell the put credit spread. You can make it $5 wide. You can make it $2 wide. It just depends on your overall risk parameters. I think I'm actually going to do both. I think I'm going to do the at the money iron condor, and then I'm going to add the put credit spread, which would give it a little bit more of a bullish slant. The reason for that is just to layer a couple different trades. If you have one that kind of works out to break even, ideally the other one does great. Obviously, in a bad world, both of them lose money, but more often than not, that's not going to happen. So, can happen, but usually doesn't. But anyways, that is what I'm looking at for all of you who are wondering if I'm still long Zillow. I'm absolutely still long Zillow. Stock market is doing really well. The real estate market is even hotter. Real estate market has been absolutely crazy. And even though Zillow has pulled back, hasn't really been doing much lately, I'm very bullish Zillow, and I'm in it for the long run. So check this out. Look at this weekly squeeze. Looks gorgeous. This is one of those you're just going to have to wait, and then, someday it's going to be up here at 250 and it's going to be amazing. So long Zillow, that's how I'm trading it on earnings, and I hope to see you in the next episode.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me